All right, let's jump into things. Where we at? 9:27 on the Friday, 21st of November. Whew. It's funny. Like I swear, like it was only Tuesday this week, and I'm like, God, this week's like dragging on. It's actually been a very good week. Probably one of my top weeks, actually, to be honest. And that I've actually, done fairly well with this price action, and that's a good thing. Obviously, obviously, it's not too bad a thing in that. But as I said, it's a good thing in the sense of, I say there's three parts to the trade. There's the analysis, the execution, and the management, and they're the three things. If you can get those three lining up, you can really hit some good home runs in that. Generally, sort of with these things, I tend to sort of do okay with the analysis. I tend to do okay with the execution, but my management's generally pretty poor on things. But this week, sort of like I'm rating myself pretty much close to the tens on all those sort of things. And as I said, it shows on the P&L at the end of the week, so that's all good. All right, let's just have a quick look around a bit of the data that came out overnight, because obviously we first time in a while we've had NFP, which were September numbers, so not October, and actually we had unemployment claims, which I wasn't sure if we were going to get with these as well. I covered this the other day as well, actually. I didn't see this unemployment rate, 4.4%, Philly manufacturing down, Philly manufacturing bit in there, whatever. That, as you can see, that thing flies around all over the place. But the bigger ones that we were looking at were the non-farm NFP, and obviously just the unemployment claims. So the unemployment claims coming out every week. I covered this the other day, and I said, look, 220s are kind of okay. They're not too bad in that. Given how the market was reacting, sort of prior to shutdown. 220s were on the better side of things, 230s were and 240s plus were kind of like, oh crap, dump the dollar kind of thing. So 220, that's not too bad. NFP expectation 53,000. I mean, you're coming up for it. Revised to -4 from 22, which is absolutely shocking. And then comes in at 119. Now, I've seen a few things that you people sort of say that they're a bit umming and ahhing about the sort of validity of these numbers, but end of the day, look, it is what it is, and you just got to go off what the market's giving you. So that is a big beat. Dollar pushed for a second, I think, and then sort of like sold down. But it's important to look at where it sold down from, and it sold right down, right where it should have on resistance. Like I'm looking at my charts pretty much to the point. So I'll cover that in a second when I get to the charts. So it's not sort of like, oh well, actually some underlying thing. No, there's a reason. There's a reason for why that sold down at that point, and that's obviously the sort of like the resistance level that we got to. I'll get to it on the charts, but the RSI was a little bit cooked as well. So, consolidation. I was actually saying to a mate as well that sort of like, it kind of probably needed a bit of a consolidation. And I think these RSIs are very important because I got snapped out a little bit with the gold silver ratio with the RSI. I said, look, it's a bit hot, but it looked like it wanted to break out, and it went poof, went down the other side, and I missed a position because of it, which isn't the end of the world, but it's just one of those things, you like to be able to read it. Anyway, you learn from these things. Apart from that, we had a bunch of speakers and that sort of through the night. I can't really see a great deal. I mean, look, equities got smashed. I know that much. And the dollar, yeah, pretty much sort of consolidated, and Aussie closed and got hammered as well after that push, and closed on its lows as well, which goes in line with the equities, which is, this is the price elasticity that I'm sort of talking about from time to time. That particularly with Aussie, is sort of like it should have been running up with equities, but it wasn't. But then when equities go down, it goes down. So that means, realistically, if equities continue to come off, we could probably see quite a bit deeper for Aussie. And, this has obviously been a trade of mine for a while. And I'm actually sort of, trying to sort of flex the hold muscle. So I've actually got some pretty decent sort of positions on the Aussie. And I'm looking for that 64.20. I took a little bit, I mean, I was still trading, and I took a bit off on the lows last night. Well, actually, just above the low, 64.50 or so, 64.44 or something, I think now at the moment. So that odd hour where the spreads go weird and metals close and all that kind of stuff. But point being is 64.20 is like going to be in my mind, on my chart, the make or break for Aussie. And I think if you go under 64.20, we're opening up to sub 63, which is another 120 point move down, which is another 2% or so. So I do think there's some potential downside, and I'll get to it in a moment. But a few things like that I'm looking at the moment are the cross chart confluence. So I may as well get onto the charts quickly through the data here. Bunch of PMIs coming out today. Look, PMIs I'm not really so crazy about. I'm not staying up to 145 on Saturday morning to watch the US PMIs. We can look at kind of what they're expecting, but as you can see, realistically, maybe a little bit of a slowdown and a little bit flat. Is that enough to sort of turn the course of direction? I don't think so. I think if US dollar breaks out, it's consolidating at the moment, but if it does break out, I don't think some slower PMIs are going to be the thing that sort of like turns the whole ship around. It sort of seems at the moment with those stronger numbers last night that the jobs market, and this is what I say about this sort of stuff. Whether you believe the validity of these numbers or not, you got to think, what is the Fed going to do? And you got to assume. I mean, you just have to assume that the Fed are going to act somewhat accordingly with what the data is presented. And at least, even if they don't, the market is going to position itself based off the idea that these are all correct and real. Like, you can't sort of trade on the idea, nah, it's bullshit. I don't believe it. Nah, like, whatever, man. This is the numbers. This is what the market's given us. That's what we're trading off. And when you break this down, these numbers here, this says that the job market's not too bad. Look, it's not super, but again, you're measuring it off what we did have. 22 revised down to -4. Expected 53 comes in at 119. That is positive. I mean, you can't look at it any other way. Unemployment numbers going down into, I told you, those teens and 20s. Well, teens better, obviously, but teens, 20s, right on the cusp here. That's positive. Um, so how do you apply that? You apply that by sort of saying that, you know, they've got the two mandates. They've got the jobs and they've got the inflation. Um, there was a point where it's kind of both bad, and that's when things get sticky. And it's just like, effectively that's kind of like stagflation, which is a tough position to be in. You'd rather, as a central bank, you'd rather deal with one over the other. And as a trader, you'd rather see them dealing with one over the other because the way that they react to both of these are very different. They're polar opposites, 180-degree turn on each one of them. If the jobs are an issue, the Fed's more likely to, or any central bank, but in this case the Fed are likely to cut because when you cut, it stimulates the economy a little bit. It sort of gets people to borrow more money. Companies borrow money. Companies employ people. Companies expand because they've got the more money on there. When the jobs are bad, so I got distracted there. What was I saying? Yeah, so I can't remember what I said. Maybe I had that in the inverse reaction with all that. But the point is, when the job numbers are bad, the Fed's more likely to cut. As I was saying, the sort of maybe I said it the wrong way around. I can't remember. Anyway, the point is, when the job numbers are bad, the Fed's more likely to cut because that will stimulate and sort of like hopefully sort of in theory get companies to borrow more money and shit means they can expand. If they're going to expand, it means that they're going to need more people, so they hire, and that brings these numbers in line. So unemployment goes down and employment goes up. But because these numbers are quite strong, they kind of sort of think, well, we don't need to give it a helping hand so much in regards to the jobs. So, it removes the thought of, hey, you know what, we need to cut to help because if we don't cut to help, well, it's just going to exacerbate the problem. So these stronger numbers here are very much in the idea of a hold hike direction, which is hawkish, but they're not going to hike at the moment. So the option is to hold. So the question is, are they going to cut or are they going to hold? And with these numbers, if this is purely the only thing you're looking at, well, this should go in the camp of hold. Now, you've got inflation on the other side of things and that. And this is why I say that sort of like, if you only had one to deal with, it's better. Because if inflation's the only issue that you've got, well, it's going up. Sorry, I keep managing these positions. With inflation sort of going higher, again, the the way that that they would sort of combat that would be a hold. So if jobs are bad, they cut. If inflation is bad, they hold. But the jobs aren't bad, so they don't need to cut, so it automatically defaults into a hold. You've got inflation not moving in the right direction, a little bit higher than they'd like it to be. It's not running out of control. If it's running out of control, they hike, but it's stable, so they would hold. If it's not an issue, well, then they've got the ability to cut. But it's not in their band, it's not at their target. You don't want to cut interest rates into rising inflation because that exacerbates the problem. More money in the system is just going to add to higher inflation. Whereas if they hold, it's like a sort of, let's just see if this thing rights itself, sorts itself out, and if it does, well, great. If it keeps going higher, well, we've got the hikes on the we've got the hikes in the back pocket. If it comes back down, well, okay, we can cut. But as you can see, with the job numbers being so strong, you can kind of strike that off the board as to what they're looking at. These kind of numbers are kind of like, okay, well, let's not focus on this mandate because I've got the two mandates. I've got the jobs and the inflation. Let's not focus on this. Let's focus on inflation. What's inflation doing? Well, inflation's moving up. It's above the band. It's not screaming, so we don't need to hike, but it's not where we want it to be, so we're not going to cut. So that would leave you with the hold. Okay, so with all that, how do you apply it? Well, look at the US dollar. The US dollar is kind of, DXY is the barometer of sort of, general sort of market consensus against the US dollar, and that's about to break out. That's consolidating at the highs. So I may as well jump onto the chart so I do this. And this is what I'm talking about. This is the kind of stuff that we're seeing. And obviously, we're seeing a big break. If we stand right back on this, it's obviously coming off, a couple of sort of different sort of confluences down here. That's fine. That's a big, broad picture. But what we're interested in right now is this level right here. And as you can see, right at these highs that we had start of November, this is like 2 weeks, 3 weeks ago or something like that, when we just had that gap, that sort of pulled back down here. We're back up here and we're testing it again, with the idea that they're potentially going to hold rates, and the market has pushed the US dollar up. Like, it's not rocket science. You just need to be able to do, break down the analysis a little bit with it. Now, it got to this point here on, what was it, Thursday? What was that? No, Wednesday must have been, because this is a Thursday candle here. Closed into resistance, close that gap. So there was a couple of questions when we were getting to this point just here. This is obviously prior to the sort of the job numbers coming out. And this is what I talk about with the structure every day. And I say, you go up, you find resistance, you come back, you find support. I said we were here when I did the last video, because I'm not doing the videos every day at the moment. I'm just doing my handwritten notes. But it's better to sort of be able to convey the message a little bit more when I do this. But the structure is always the same. You move up, you find resistance, you come back down here, you find support, and then you come up here. And we were here, and I said, look, you minimum need to come up to here, because that would give you a lower high, and then it justifies a rollover, should that have come. But obviously, I said, I'm in the camp of closing the gap. That was the thing. And this is where brings me, I am rambling on, but this brings me to the point of where we are now. We closed that gap, and that's where you had a question mark over it. Is it going to be a double top? It obviously wasn't a lower high. So your options are double top, or does it break through? Now, it's consolidating up the top over here. Consolidations, I mean, this is a doji candle, indecision on the market, so to speak. So it's come up here, it's closed on the top. It's actually sort of had a little bit of a bullish push, close for the day. This is on the daily chart. RSI looks happy to support the move should it break up and go higher. So I'm going to put a little alert just above those highs, and I'm going to call that breakout. And I think this is going to be a fairly chunky breakout. I think, obviously we can look at these levels, top of the channels, potential. We got a little horizontal coming through here as well, but I'll call this breakout in capitals above that zone there. So given the sort of technicals here on the daily, looks ready to go. Given the fundamentals, well, there's a reason behind it sort of moving up like this. It's not just screaming for stops. If we have a look on the 4 hour, look at this. And this is what I'm talking about. it broke up here, had this big breakout, big sort of thing. And this was what I was saying the other day when the video down here, 99.7 was the level. This was the one I called it, or I've been calling it a bunch and said, look, 99.7, that's the level to get above. Broke above it, teased, and then when the second effort's the other thing that I always talk about, second effort pushing through that level, that was the confirmation, bang, up to the top here. Now it's hit the highs, it's sold back down. Now we need that second effort, and that'll sort of take us through, and that'll give us our breakout there as well. The thing is, though, and I was saying this to a mate the other day, sort of like this RSI, and I said this at the start of the video, this RSI on the 4 hour was a little bit cooked at this point here. Always with a sort of technical, when you get back to levels, they very rarely break through first time. So you move up. This is what you want to see, though. You know, this could also sort of come back down here and then sort of move back up. But the fact that it's consolidated here, if it does break here, it doesn't mean the show's over. It doesn't mean sort of like, okay, well, that's it, failed, breakout, double top, yada, yada. It creates the possibility of it. But the fact that it's sold up, it's consolidating up here, even with that sell down after NFP, which is odd because that kind of should have been more dollar positive, but they sold it down. Buyers are stepping up. They're not waiting for the perfect retest of this little midway breakout point or anything like that. They're saying, hey, look, I'll buy it here. You know what? NFP was strong, but for the whatever reason they've sold it down, well, I'll still buy it. And they'll buy it, they'll buy it, they'll buy it. And it's just interesting that this gap is where it's holding as support. So consolidating at the highs underneath a major resistance is the buyers going, yep, I'll buy it here, I'll buy it here, I'll buy it here, I'll buy it here. That's why if we do see a fail of this little consolidation and starts to come back down here, it starts to make go, okay, maybe it's not really quite ready, and you kind of sort of switch off at least for the end of the week, maybe look for a retest of 99.7. But as it stands at the moment, that's kind of like, you know, you can't really draw this out as a flag, but it kind of is, really. If you sort of call it like that. That's kind of, call that your breakout box. So that kind of your flag. Let's make it a little thicker. And you know, whether you want to do that there or there, that's kind of where you're looking at. And to me, that looks pretty good because that's obviously coming in line with where we kind of have the top of that channel. So look, as I said, I think sort of if we do get a break above here, probably a move up towards sort of 101 would be the measured move, I would say on that. So pop this one just along here. So that's price target on a break of the highs. We do have a little bit of a zone through here. Is a daily for some reason. I've marked it back here, bottom of these resistance and this high over here. Look, probably get some sort of reaction there. Look, it's not going to be easy on the way up. I don't think we're going to get another break like this. We could, but I don't think so. But we'll see how we go. But certainly, as it is at the moment, you've got the fundamentals backing it, which sound okay. You've got the technicals that are not too bad here. Might need to consolidate a little bit more to sort of burn this sort of RSI off a little bit. But, you know, it's getting back into the mid-range here. So should it turn up and we see a positive move, you know, that could definitely see this. There's a little thing gone. There's sort of push back up here. Move like this. Price at the same time could do something like this. You know what I mean? So that's the potential with it all, in my opinion. Of course, this is my opinion. It's just it's me just gabbing on about the charts. Anyway, for me, it looks dollar bullish in that at the moment. If we flip across, have a look at Aussie, because Aussie's really sort of traded quite well here. So we've got this large structure. If we get back onto the daily here, you can see this triangle, which has actually traded very well here. And this is why, probably partly the reason that, as I said, I've had a fairly decent patch at the moment. This sort of area through here, I've sort of called this move back up into the top over here. And then we sort of start getting short again, and we started hammering it down over here and that. And so right now we're breaking this structure. And even on the video, I think it was a Tuesday, it must have been. I said, look, we're about here. Where was it? This was Tuesday here. This candle here, this blue one. I said, look at the line here. Down, retest, lower low, second effort. That's what it is. Break, retest, boom, second effort. And that, look at where we are. move right down there. So obvious sort of target here, 64.20, 64.21, this kind of area, this band through here. This has been a fairly strong support going back to May. May 28th. It's my birthday back here. So going back ever since my birthday, put it that way, it's been a pretty strong support. 64.20, obviously tested underneath here and then shot back up over here as well. This, I think, will be a very interesting level. Obviously, this spike low, that's probably going to hold something as well. If you drag this probably across, you start to see that it kind of holds up here a little bit as well. So, how do you trade this one? Well, I mean, obviously 64.20 to me is that level, but that same sort of price action of that down like this potentially is what we could look at. And, how would this line up on the charts? Well, I mean, obviously Aussie's not part of DXY, but it does flow with the US dollar strength, not all the time, but most of the time. So maybe we get a breakdown here. Maybe that gives the DXY a chance to go up to the top of its channel. DXY sort of, across the board, they book some profit on some US dollar. Maybe we see Aussie have a reprieve, and then it sort of pushes back down here. Again, it's just a narrative, but it's an idea of how potentially this thing could break and come down here. Certainly, if you get this structure, if you get down to 63.70s, get a retest and second effort through this zone here, bang, not exactly that point, but as I said, I do price levels, not time levels. But if we do that kind of structure, that is good night to the Aussie, in my opinion, because underneath that, you really got some open air to deal with. I don't think we're coming down to these levels. I think sort of certainly we can then get into sort of this area here and work out, where was the market valuing this? But, just as a quick glance, I would sort of maybe chop, whoop, that's not it. I'd maybe sort of chop something through here. I'd have to look at this probably because it's so choppy, it's a bit hard to get sort of full levels, but they're kind of the levels that I'd be looking at. And then you grab a, just for fun of it all, I'd have to sort of probably touch those up a little bit. Something along like this. And all of a sudden you start to get this area through here, which we've seen supported a few times, very close to this 61 fib, 61% fib. So that's the ultimate kind of sort of price target. And you know what? If we see the dollar run, that's where it's going to go. Price target. Make it different colors into zones. Bang. That's where we're potentially going. 61% retracement of that April low to whenever we made the high, where we make the high in September. So we haven't even made a high since September. But, that could definitely sort of get back here, and then you load up for your longs, and then we sort of start to move up here. And look, this could work, and it could work with the idea that we get a little bit of US dollar strength for a period, for a couple of months even. You know what I mean? This could take us out to the end of the year, and this is what I've been sort of touting, that I've been positioning myself and trading against the idea of US dollar strength. And obviously with that, Aussie to the downside. So, it's not hitting this today, that's fine. But the general idea is if you can get the confirmations through these levels. So, firstly, we got the triangle, broken. We got the horizontal here, break, retest, lower low. So, you should expect this to continue flowing down here. Now, you got to say, where have the buyers been? Well, the buyers have been here. The buyers technically have been here as well. So these are areas where we're going to get reactions. Markets, you're going to either book profits on your shorts. The longs are going to have another attempt. But if we see a lack of buyers at this level, if we see the retest, yada, yada, lack of buyers at this level, that's where you're going to, in my opinion. That's where I'll be trading short, sell rips till we get down to that sort of 61.8 level. Move along, we got gold. Now, gold's a tough one at the moment because we're kind of in two camps. Like, yes, I've got my large price target down 3700s, but again, we need the confirmation to get down there. But should the US dollar run, can it hold up? That's the question. I think sort of this 40-30 is going to be very vital. Let's put it on the 4 hour. This one's a very messy chart, but that's all right. Um, so big thing with gold at the moment is we've got this big triangle. This is what I'm looking at the moment. There's triangles through here. Forget the noise of the ups down because this has been just insane trading. Like I got the longs here, got off way too early, shorted the hell out of this thing down here. I didn't catch this. I shorted this. Like it's been as I said, it's been a fairly decent little period. But the point is where we go from here because this is just chop. This is just nothing. This is fine for me when I'm trading in and out, in and out, in and out. But imagine trying to buy something and go, okay, am I long, am I short? And I just want to sit there and hold. Like you're just getting demolished in this area because the swings are violent as. I mean, look at this, down to 4,000, up to 4,130. Back down to sort of 4,038. Like these are in out trading, risk bandit status, in and out trading perfect setup environment. But if you're trying to buy something and hold it, well, it's tough. Like I've actually got shorts. Like I've set up another account. I've still got shorts from 42, I think they are. Up in this area over here, so 4,200. So fairly well sort of secured. Um, but it's been a nightmare, like to hold. But I'm trying to sort of work on that with a separate account, of course. But anyway, point is, where to from here? So I like this area here, this 40-30. To me, this is going to be a decent area. We seem to be sort of grinding along towards it. This RSI is a little bit, and this is why it's tough at the moment because this is consolidating sideways. RSI is pulled right back here. This has got the ability to do two things, which do three things, do nothing, I suppose. But this could be going up here. Whoops. Or it could be going down here. Either way with it all. You can't really sort of say. So it could support a move and then justifiably move back up over here. Now, a close above 4,012, I think gives you an upside move. And I think potentially, if you look for that, this is what you're looking for. Above 4,012, up here, and then sell down. Fills out the structure a bit more, so it's not too bad. I mean, triangles, some of these things like to go right to the point and then break, or break. So there is some thought to upside here, just to fill out this structure. If we see this set up here, I'm going to hold horses. I'm going to try and short it more from up over here. I'll be disappointed because I've got these longs, so shorts from up here. But that's the name of the game. Maybe I'll lock some in above that level there. That's probably a good idea. Maybe I'll I don't know. I mean, it's tough. I don't trade hold, so I'm like, yes, do I hold? Well, anyway, we'll see how we go. Point is, we're doing the analysis. So potential if it does come up here, I'll be looking to short and add to these sort of cells from up here to sort of fill out the structure. Now, if this thing decides to break lower here, which could be exacerbated by US dollar running, but as you saw with the RSI, it may need to chill a little bit more. If it chills a little bit more or pulls back, that's probably what we're going to see, the upside move over here. If the dollar does break and run, then we're going to be moving down here. And this is the area that I'm kind of really pretty interested in, this 40-30 area here. I think below this 40-30 area, the way that it's lining up has come in with a beautiful confluence. This one. Take this one. Beautiful confluence at this zone. So if you break this 40-30 now, like we've tested underneath, that's all right, it's holding just above it. If you break 40-30 now, that was that breakout level that got that big second effort run. If you break that again now, think about it. 1 second effort, boom, we're coming down. So this is a question, and this is why it's a little bit tough to get a full read on this at the moment. Let's put this in blue. Move down, you find support. Up, find resistance. It's coming down. It's in this third leg here now. So if we come down here now, that confirms this downward motion. That's what we're looking for. Break under 40-30, move to 39.30. I mean, look, it could be 39.70, it could be 39.30. The point is it'll come under here. Retest underside, 40-30 again, underside of that, second effort there, bang, bang. And that's how you get down to 3,700. And nothing, obviously, as they say, nothing goes in a straight line, but that's potentially how you get it. So, yeah, that's the plan. So you build it back, get all the stuff out of the way. And how does it start? Well, it starts with breaking 40-30. So break 40-30, expect to probably run down to 39.70. Put this one in here, 39.70, 39.30, these kind of areas down here. Expect a little bit of a bounce, maybe a retest, and then continuation moving down. Should the dollar run? If the dollar runs, that's the plan. If the dollar does fail to break out, then I expect this to move here, to come up this way. So this is the second, this is a backup plan, but this is kind of what I'm sort of looking for to happen. Downside on gold here, but 40-30, that'll be the crucial point. Silver, Chop City as well. Look, it's in two camps with this again, which is always fun. The two camps being, I've just ticked over 10 o'clock, so I just get a little bit of volume. Not really too much here. No, nothing exciting. Oh, actually, we should get metals just opening now, actually. I might have to jump off in a sec. So anyway, the point is here, so double top puts your focus on the downside here. I said on the weekend that if I was a bull, what would I be seeing? I'd be seeing a cup and handle. So that puts your targets back up really around here, like a close above 53 30s, 53.40, a close up here, you're off to the races. And you look at your measured move, and your measured move, what's the measured move taker here? It's not quite 70 yet. I know people are very sort of keen on that. Split the difference with those, let's make it here. That's your measured move. Should that be a cup and handle, you're up to 57. If we see metal, if we see the stock market fly, if we see US dollar sell off, that's when that'll happen. Is that happening? No. US dollar is on the cusp of breaking out. Equities had a pretty heavy sort of sell down, so that's not really the right environment at the moment to see that. So downside, I think a close underneath 49.90. We're looking at 47.80. A close, even moving up here, I'm not really too interested in it because I think underside of this trend, we're still looking for downside moves here. So I'm just aware of where that would be. Okay, boom, it's going higher, but as of right now, it's not there. What we could see is some more consolidation through here. Should US dollar pull back, or should US dollar pull back, or should it fail, then that opens it up for a little bit of upside through here. Move along quickly. We got copper. Copper is still, as you can see, it's respecting these levels. Rejected down to the downside there. Slow grind, head and shoulders. Says wants to come lower. Look, metals they're not all sort of wet, and obviously they serve different purposes. Silver and copper are closer than gold and copper, and gold and silver are closer than gold and copper. So silver's one of the ones that can kind of fit in the band of the two. But generally, if you see metals it's like sort of DXY. If DXY sells off, Aussie's not part of DXY, but you can kind of get a general feel of what they're doing with the US dollar. And this is the same thing with metals. It may be a precious metal run, it may be a copper run, whatever. But generally, if they're selling metals across the board, they'll all sell off, if that's the theme. And if we see a sell-off in one, most likely we will sell-offs in the other. Plus, by extension, this would add to the argument, which it hasn't been for a little bit, of downside for Aussie. So this is kind of showing me downside moves here. Obviously, confirmation underneath this neckline here. And then finally, the one that is just snooze fest. This is just, yeah, grind city. No major breaks, not failing, just sideways. Snooze city. All right, that's it from me.